Hi there, welcome to my channel. Today we're going to be taking a look at analysis of some currency pairs, and on my list is the dollar index, gold, US30, USDZAR and EURGBP. So we're going to be looking at what the market has for the week for us as far as these currencies are concerned. For the dollar index, we could see that price has been on a continuous downtrend. On my previous video, I talked about how you could identify a trend in the market. And one of the ways you could easily identify that is seeing the market create levels of highs and levels of lows. So dollar index on the 4 hours time frame has been trending down, creating levels of highs, levels of lows, highs and lows. So this technically swing low, swing high, swing low, swing high. So price has been waving. So picking up the trend line to connect those levels of highs and levels of lows, let's see what the market is going to show us. When you're placing your trend line, you want to see that price is sitting on like at the top of the candle of the candles. You don't want to see your trend line passing through the body. The reason why you want to do this is because you want to be able to read price action properly. So right here we're seeing a descending trend line connecting the levels. This was the high, this is the next high, and here's the next high. So connecting the lows will also give us something worth watching. So say we want to connect it from here to here. We might miss out on this. Let's just try it. Now, if you do this, there's going to be some candles, shooting out of it. It's pretty much like a fake out, blah, blah, etc. So what I'll rather do, I'll rather try to connect this, right here and connect it right here. So when you're your trend lines, the reason you do this is so that you can observe those levels of support and resistance across the trend. So you don't want to miss out on anything. So if you place it and it's not really looking right, there is nothing wrong with you adjusting your trend line until you see what you want, what you're looking for. So you don't want to try to be Mr. Perfect. You just want to be profitable. That's all you care about. That's all that matters to you, isn't it? So having connected the highs and the lows, we could see that the market is pretty much giving us something like a wedge. So for those who trade wedges, you will easily know that when you see the market giving you falling wedges, it's technically signaling an imminent break to the upside. But for now, this hasn't really given us any signal that's going to break to the upside. For now, the market is still trending within this wedge. We could call this a consolidation technically, but I'll rather call it a trend. So the market has been trending within the falling wedge, and we're expecting to trade this. So how do we trade this? When I did talk about trading patterns, the M's and the W's, I mentioned that you want to look to buy the W's and sell the M's. Remember? Good. So right here, we're seeing a clear W formation. Right here, we're seeing a clear W formation, and price picked all the way up to the neck level. Picked all the way up to the neck level, and it's giving us some kind of reaction. So there's a reaction at this zone. There's a W here, yeah. So those who saw this would have bought it at this point, and then the market is here and it's reacting. So what does that tell us? It means there is a level of interest right here. It means there's a level of interest at this point. So this is the neck level of the W. So there's a level of interest, meaning we want to watch it. So if you take this up here, like place it here, and then mark your zone. When it comes to trading, the rule, amongst other things, the rules, amongst other things, is to make sure that you keep it simple. To make sure that you trade only when the opportunity is ready, when it's green to go. You don't force the market. You don't try to make it show you what you want to see. You always want to make sure that it actually has shown you before you actually do trade it. That's the whole principle behind having a trade plan. The trade plan consists of all of the reasons you would see to take a trade. It's not about planning to say, okay, I'm going to use 1.0 to trade this, I'm going to use 5.0 to trade this. No. If you have a bias for a buy, you should know what you will see, what confirmations which will inform your buy decision. So even if the market is showing you buy, there has to be reasons for you to go, to go buy the pair. Okay, so this has given us a W formation, and you can see here there is a level, there's a zone here also. I marked it out while I was talking. There's a zone here. Why is there a zone here? Let's blow this out. Why is there a zone here? Because previously the market dropped here and found some kind of support, then it broke it, gave us that W formation, and then started going up. So when that happens, this zone becomes a zone I watch, because one of the things I've noticed trading the W's is that when the market gives you that, I like to call it a wing, but it's not really a wing, but I just like to call it a wing. Let me try to draw out the structure. So expect to see something like this: a drop, a push up, a drop, a push up. All right, normally that's how it looks, but you also want to take note of how this place right here is, because if you don't, then you might be missing something. This will also serve as something to watch, something to see, because take note, this market was trending down before it created this, so it usually gives us some kind of wing-like formation around the W. So that first leg of the wing is a leg I like to observe. So there is a first wing here, so I'm waiting to see the market react on the second wing. How does it react? I mark out that zone, because usually price tends to break and then come back to use that wing level, that wing area as a point of support. So to use that wing area as a point of support, and then it begins to try to find its way back. So last week you could see how the market closed. This zone right here looks to be holding. So this is a level of interest. This is a level where you want to say, okay, if I see this, then I'll trade. If I see that, then I'll trade. So your if then will hold. Okay, so remember there is a bullish wedge here. Why is it a bullish wedge? Because it's a falling wedge. A falling wedge is a bullish wedge. A rising wedge is a bearish wedge. So there's a bullish wedge right here. There's a W formation right here. So what we want to see the market do is break out of this, come back to do a retest, and then price continues to take us all the way up. Okay, so that's for the dollar index. It is at a zone of interest. So this is at a zone where you want to watch as a trader. You say you want to trade the forex market, then you shouldn't be lazy. You should look to actually trade the forex market. So have all your confirmations, see all your reasons, and then trade your market. So next on the list is the gold pair. Now this pair is interesting. Aside the fact that it's a safe haven currency, it is also one pair that has very good rewards. So I personally like to trade it, but I also trade it with a lot of caution. Currently there's a lot of heat in the Middle East. There's a lot of back and forth war, bombing and all. So that will affect the movement of this pair. It's going to affect it real good. Why? Because it's a safe haven currency. So if there is any economic unrest, any global unrest, these pair begins to rise. You just start rising and rising and rising, because investors come in to dump their money in it because it's safe. So it's a safe haven currency. So because of all of the fundamentals, gold might not really move the way you expect it to move. So you could see it rise and then suddenly drop and then suddenly rise and drop. So it just start giving you spikes and wicks and all of that. So for that reason, I would rather just stay clear of this market. But technically speaking, the market is at a point where we should be seeing a drop. In my subsequent video, we did analyze the pair and we saw a bearish harmonic pattern that is just about to begin its journey. All right, we saw a bearish harmonic pattern, and the market has returned to the level of entry for the for those trading the harmonic pattern. Although in one of my online courses, I'm going to talk extensively about each of the harmonic patterns, the different types of harmonic pattern, and how you could trade it. So for those who currently trade it, when you see the harmonic pattern, especially for the bearish one, you want to see price react at the D level, because that's where you enter from, and then you also want to wait for it again to return to give pretty much like give you your M formation. So for the bullish harmonic pattern, you want to see it give you your W formation. Okay, so when you see that, then it is good to go. That's a free nugget I just dropped. So if you're smart, you take it to heart, because that is one simple secret to trading the harmonic pattern. Okay, it's very simple, but not many people know it. So I just gave it to you. Yeah, you're welcome. Okay, so this, technically speaking, is at the point of drop. Okay, but the fundamentals will affect it. So to trade this, you could just take a position, a reasonable position, without over risking your account, over leveraging your account. Take a good position and just let the trade run. Apply all of your risk management and all of that, and let the market run. Because if this plays out, we're looking at a long-term sell. We're looking at a long-term sell. We're looking at a sell up to this point, and of course it won't happen in 2 days or in 2 weeks. It's going to take a while, estimated like 3-4 months, but it's a sell nonetheless. So if you have a good enough capital, you could use a reasonable lot size and just leave it. So despite the heat in the Middle East, we are expecting this to drop. Okay, because looking at this, there's a flag here, it's completed. In fact, there's a lot of reason, technically speaking, that gold should sell, but the fundamental, of course, will keep affecting it. So take your trade, apply your risk management, and let the market rise. All right, so US30, another very interesting pair to watch this week. US30 is also at the point where we should see the market drop. One is at an extreme high. It's at an extreme high. Two, price is also at the point where you should see it drop. And then more importantly, there's a very beautiful candlestick pattern. A very beautiful candlestick pattern right here. Very beautiful, and very clear to see. Okay, so I'm going to talk about this harmonic pattern. Did I say harmonic pattern? I'm going to talk about this candlestick pattern right here. All right, so I'm going to talk about the candlestick pattern right here. Although I did do a very extensive lesson on candlestick patterns, because as far as entries goes, the Japanese candlesticks still make for better entry confirmation. They're one of the best price actions that knowing them really help you, save you a lot of drawdown, a lot of wrong entry, mishaps and stuff. So this is what we call the railroad. The railroad is just simply two opposite candles that are parallel to each other. The railroad is just simply two opposite candles that are parallel to each other. What that means is that you see a bullish candle, what you want to see following closely will be a bearish candle. And you want to see them close at the same point. Now, there are two types, the bullish, the bearish. Okay, you want to see them close at the same point. Now, take a look at this. This candle right here opened here, right? They opened here, pushed all the way up, all the way up, all the way up. And then what did it do? It closed right here, right? And then when it closed, the next candle following opened here. Now you would expect that after opening it will continue to rise and stay there, but it opened here, it did rise, tricking a lot of people into entering the market. People who trade, the candle is going up, jumping, it's coming down, jump out. It tricked a lot of people into entering the market by rising. Then what did it do when it got here? It dropped. dropped all the way down, and closed at the exact point of where this one opened. So you can see that they are parallel to each other, opening and closing at opposite levels, but the same level. So this is a bearish railroad. Same thing applies for the bullish railroad. This is a good entry confirmation for you to trade anything. You see that with higher time frames, they make for perfect entry confirmation. So that's one of the strategies you could use, whatever kind of trader you are, be you a scalper, be you a swing trader. These are the beautiful kind of strategies you want to use to enter the market. This is also another candlestick pattern to trade. So on one of my online courses, I did talk extensively about identifying these candlestick patterns and trading them to make a profit. So you can look out for that video and equip yourself with having all the skills to profit. So that's for US30. The bias is a sell. So the market opened on the 15 minutes time frame, sorry, on the 1 hour time frame. On the 1 hour time frame, there is also a very beautiful structure right there. There is a bearish harmonic pattern here. There's a bearish harmonic pattern here, and we're expecting price to continue to respect that pattern. This is here. So there's a bearish harmonic pattern here, like I just said previously about trading bearish harmonic patterns. You want to see it give you an M formation. So it's just giving us the first leg of the M. So people who trade harmonics technically, they would sell this first part because they already know the entry level for each of the harmonic patterns, because there are different types and they each have their different levels of entry. So they would have sold this first part to take profit and then wait for the market to give them another opportunity. But we that trades it following the M&W strategy, we wait, right? So we want to wait for price to return. So you can return to this point, or it could even go further. It doesn't matter. All that matters is that we are waiting for an opportunity to enter. The bias is bearish. The entry is what we're waiting for. So if it gives us this beautiful, we sell the market and enjoy the profit. Okay, so that's the US30. The bias is bearish. So for the USDZAR, I saw something really interesting that I need to talk about. USDZAR, for those who trade it, that's the United States dollar, South African rand. For those who trade it, it's really cool for the week. Very cool. Why? Because you could profit both ways on it. You could make money from the sell and also try to make money from the buy. What do I mean? Now, this structure on the 1 hour time frame, there is a bearish head and shoulder pattern right here. So there's a bearish head and shoulder pattern right here that is at the point or the zone where you should see price drop. Okay, it's at the left shoulder. So personally, how I trade harmonic patterns, I trade it from the shoulder. I trade it from the left shoulder. I don't really try to trade from the neck and stuff. I trade from the left shoulder. That is, I sell it from that point, sell it down. So all of these swings and low and all that, I mainly trade swinging it to this point. So wherever I start from, that's where I look to take profit. I don't bother with the calculation, with the mathematics in it. I just trade it because that's how I've observed. That's the nuance, that's the behavior. So that's how I trade it. So I don't trade it from the neck. I trade it from the right shoulder. Okay, so there's a head and shoulder pattern right here, and there is also a potential double bottom right there. So I'm going to draw out the double bottom so that you could see that for yourself and you could trade that. Okay, so I don't trade head and shoulders from the neck. I trade it from the right shoulder. That way I get to profit better than somebody following the textbook principle to trade from the neck, because sometimes this thing has gotten to the neck and before you know, it's going all the way back and hitting stop losses and all. While those of us that already traded it from the right shoulder will be looking to book profits. Okay, so there is a period head and shoulder right here. So we want to see price finish this, like play out completely and drop all the way to this point, and then potentially create a double bottom. So this, something like this, and make this. So we're looking to see this. They're already giving us that, right? Peak tag, give it the head, and then we want to see this drop. We want to see this drop to this point, and then this will be our zone of interest, and then we want to see it all the way move all the way up to that point. So this will be our zone of interest, the zone right here. So that, as I said, is interesting because you could profit two ways. You could profit from the sell and you could profit from the buy. So when the market opens, look to sell it from this point all the way down and then enjoy your profit. And finally, EURGBP has a bullish flag. There is a bullish flag right there. Last time we did talk about it being bullish. So the market has given us that first leg, beautiful profit right here, very beautiful, and then it started correcting, which are some of the things you look to see as far as flags are concerned. So first give us an impulse leg and then start correcting. So at the end of the correction, what you should be looking to do is enter the continuation. So say you missed the first move, wait out the correction, then enter the continuation. So what we're seeing right now is price at the resistance level of the trend line. So what I would like to see happen is the market to return to this point, because personally I like to buy it from this point. As far as flags are concerned, if it's a bullish flag, I only look to buy from the support level. I don't sell it, I just look to buy from support level. So I rather look to see price return to this point. This is where I would like to buy from. I wouldn't want to buy from any other place. Say buying from here, for example. No. Why buy here when you can buy here? So when I release my online courses that I talk extensively about wave trading, you understand one of the ways you could tell the price is about to break out of a particular channel or wedge or whatever. Okay, but for now, basic trading, you want to look to buy when price returns to this point. So don't rush it, just wait for it. Some traders set buy stop orders here so that when price breaks out of it, they will be in the market. That's one way to trade it. But personally, I like to buy it from here. That way I get to take all of this profit and enjoy the ride. Okay, so when that happens, the exact length of the impulse move is what we're expecting to take as profit. So the exact length of the impulse move will be our profit target. So right here at that point there will be our profit target. So trading doesn't have to be complicated. It could be simple. It could be very simple, like real simple. All you need to do is know what you're doing, know what you're looking for, come into the market, see what you're looking for and trade it. You don't see what you're looking for, go do something else, enjoy life, travel, read books and do stuff. And when you see what you're looking for, you trade. Alright? You don't need to go biting your fingers, pulling your hairs and stuff because you're a trader. You don't need to do that. All you need is to find ways to keep it simple by understanding how to read price action and market structure. So I hope this really helped a lot of you to trade profitably this week. Don't forget to subscribe if you're new to the channel, and feel free to send us questions in the description section of the video. You'll see our email address that you can send us your questions to, and we'll be sure to respond to you. Alright, thank you for watching. Enjoy the rest of your day. Goodbye.